To get some more detail around that, investors are expecting margin improvement in its North American retail business, possible upside as well for advertising as Amazon launches ads on Prime Video. But Amazon's stake in Rivian could be one drag on results. Shares of the EV maker down about 30% this year, Scott. Back to you.
All right, Kate, we'll see in just a bit when those numbers come out. Julia Borston on Meta, what do we expect here?
Well, Scott, the key number to watch here is revenue. It's expected to grow 20.
Just looking for, waiting for earnings to come out. These are the last big tech earnings. Oh, let's go live over here. Forgot about that. So basically, we got the last key important earnings coming out today. We'll see which way. We'll see how the market handles it, right? We have tomorrow. Most importantly, we have the employment report, which the Fed has been chiming on. We got earnings after the bell. And these are pretty much your last biggest events for the market, right? Apple, Amazon, Meta, big mega cap earnings. We finish that off. And then we go right into the earnings report. I'm sorry, we go right into the employment report on Friday. So this is it. This is the last information that's going to go into the market. Currently, we have the S&P. Okay, now we got all the charts up here. Let me see. Let me move. I don't think they've reported yet. I'll pause it. So really quick, we're looking at the charts here on, move that over. We're going to be watching the after hours to see how they start moving. So you got S&P here, top right hand corner. Okay, we'll see how that finishes off. We're almost there. And then we have Apple. Put Apple right here. Looks like Apple's starting to bid up a little bit into the close. All right, let's bring this down. There we go. And then we got Meta. Here, let me close this for you guys. A little closer. There we go. All right. And then we got Meta. And then Microsoft. So, or not Microsoft, my bad. Amazon, Meta, S&P, Apple. We're almost there. So we'll see how this comes to play out. Currently, let's go see. We're looking for iPhone. We're looking for earnings per share, $2.10 revenue. So for Apple, again, it's always important that we look for iPhone revenue, Mac revenue, iPad revenue, wearable revenue, and services revenue. Those are the key metrics there. Gas just went up. You said, Ronnie, gas went up. How much did gas go up? I don't think it's moving up that much. Tiny bit. It's going to be a little volatile. All right, let's zoom in a little bit. Apple selling off a bit after hours. See how the S&P reacts to this. I think we can pull this down a bit. There we go. Awaiting Apple, Amazon. Ooh, is that Amazon already? I think Amazon has the best chance here. Apple's moving up. I think Amazon has the best chance because the stock has been sold off. It's underowned. It's heavily underowned. And Meta, maybe. Meta's at all-time highs. We'll see how Apple does. But that is my guess. You got Amazon already moving up a little bit. We'll see how this plays out. Last big report, pretty much. All right, yeah, we're almost there. Where are we at? Okay, so yeah, I'll be watching these. I can't show both of them. Ooh, dang, Amazon is popping. Amazon is moving. Okay. Apple, we'll see. S&P, because S&P's bounced pretty hard today after that sell-off. We came right into resistance too. This is the and this is the main resistance that I'm looking at for S&P. Should be able to see that, which is yesterday's Fed meeting high, right? So you got to get past the Fed meeting if you're going to get back up. That's where the big sell orders start to step in. So if you get past that, then, you know, you should be good. We'll probably come back in and test it tomorrow if we get above it. Okay, Amazon results out. We're going to switch over. We're going to switch on over. We got Amazon. All right, let's hear it.
I think, though, longer-term trends mostly confirmed, both with the economy and with the large-cap tech stocks. I'm most interested in the differentiation. You want to see them move one by one and not as one big blob.
Mike,
of
we
Mag
have the
7 that's
results for
happening.
Amazon. We're going to go to Kate Rooney right now for those numbers.
Hey, Morgan. So it's a beat here on the top and bottom line for Amazon in its fourth quarter. EPS $1. That's 20 cents better than expected. Amazon's revenue, $170 billion. Street was looking for $166 billion. Looks like it's a slight beat on the Q1 revenue guides. The midpoint may be slightly light here. They've got $138 billion to $143 billion on Q1 revenue guidance. Street was looking for 142. AWS growth, this has been a key number the Street was watching. 13%, right in line with what Wall Street was expecting. And we're going to keep looking through this for more guidance, guys, and a little bit more color. But beat there on the top and bottom line. Back to you.
Kate Rooney, thank you. We'll come back to you when you have a little bit more. Dan Ives, I see you nodding your head. Your reaction?
Yeah, now is the key. I mean, I think fears you'd have 11, 12% growth. You saw 13%. It goes to really the debate here. I mean, you have Redmond leading, of course, where Google is in the cloud. Where's Amazon? You're starting to see reacceleration. This is going to be the focus for Jassy on the call.
Paul Hickey, for Amazon, North American segment operating revenue came in, it looks like, pretty strong, 105.5 billion versus 103 expected. That's for the revenue on the top line. International revenue also a little bit stronger than expected. We just talked about AWS. Does this kind of stack up well enough in your estimation versus what we just saw from Microsoft, which really outperformed across just about everything?
Yeah, no, I think 13% they hit the AWS number right on the dot. The North American sales strong, and what you're seeing is Amazon able to, they put in all that investment over the years, and they were, the stock was punished for that. But now, they beat estimates on earnings by 20 cents. They're reaping, those investments now and benefiting from it. So that's an important thing to watch. They've continued to invest over time, and it stands to their benefit. And making the cloud numbers, which some were a little bit worried about, right at 13% on the dot, is certainly something that people can take heart in.
Yeah, Victoria, I mean, it was Amazon Web Services. It was a report card on the holiday retail season. And we have commentary here from Jassy saying that Q4 was a record break.
Yo, we must got Meta in, too, because Meta is exploding also.
Business, which we know is growing very quickly for Amazon. Shares are up right now, almost 4% with the initial read on this report. What we've heard so far, your takeaway?
Yeah, I like it. I think we knew that retail was going to come in strong, and I'm happy I participated in helping their earnings there over the holiday season. I think we all did. But look, we knew retail was strong from credit card and some high-frequency data. AWS is great. It looks like maybe that trough is in. We'll see growing there.
Damn, looks like Meta's going to be paying a dividend for the first time. That's insane. So this stock is probably going to be, it's probably going to pull an NVIDIA at this point.
Acceleration in the IT spending.
Got to stop you there because Meta earnings are out and Julia Borston has the numbers. Julia?
A big beat here, John. Meta beating expectations on the top and bottom lines. You see the shares are shooting higher, 6.5% in after hours, trading on revenue that grew faster than expected, 25% to $40.1 billion. That's versus the $39.2 billion that analysts had been expecting. And it's ahead of Meta's own guidance range for the quarter. Earnings per share of $5.33, coming in ahead of expectations of $4.96. And some big news here. Wow. Meta declaring its first quarterly dividend ever, 50 cents per share, payable March 26. also announcing a new $50 billion share buyback. Now, just to quickly go through some of the other key numbers here, Reality Labs revenue crossing $1 billion for the first time, though the quarterly losses for Reality Labs of $4.64 billion was ahead of the losses expected for that division. Operating margins of 41%, ahead of operating margins expected of 39.5%. And given the big focus that we've had on expenses for Meta, I want to point out that the outlook for 2024 expenses is staying the same at a range of 94 to 99 billion. In terms of guidance, the company is giving revenue guidance in a range above the consensus. Q1 revenue outlook at between $34.5 billion and $37 billion. The estimate is for $33.8 billion. And then the user numbers here, Facebook's daily active users, 2.11 billion, ahead of expectations of 2.08. Monthly active users, 3.07 billion, ahead of expectations of 3.06 billion. And daily active people, that's the number of people who are on all of the different Meta apps, up 8% over the last year, better than expected to 3.19 billion. Shares now up nearly 8% on this beat across the board. Back to you.
All right, Julia, thank you. Mike Santoli, it's been a while since we heard from you, so I got to go to you on this, particularly when it comes to the dividend here. Yes, the numbers overall are good, but, you know, we've got Meta well above 400 a share. I know it peaked above there a few days ago, but it had been in the dumps for a long time because of how much they were spending in part on the metaverse and the fact that there were all these questions about whether the business model was broken. What does this mean for this kind of tech company that traditionally has shied away from a dividend, though we know Apple did it years and years ago, to express this kind of confidence in cash flow and this sort of, I don't know, maturity?
Yes, I'd say all of that applies, John. Pretty assertive statement that, look, there's enough to go around. You know, as of September 30th, earnings for this quarter were supposed to be 483. They came in at 533. That was only 4 months ago. You got to keep in mind the momentum in the underlying business. They are making gestures of capital discipline, of shareholder friendliness. They seem to have obviously taken to heart the criticism that they were being profligate and spending big. Very much, I think, setting themselves apart from Alphabet, which has not paid a dividend after a longer history as a public.
All right, if you haven't seen the chart, Meta is up right now. I mean, it closed at about 395. It's up at 430, so Meta is exploding. We're probably going to see the Qs at all-time highs tomorrow, especially if that employment report doesn't come in as a bad side surprise. And I don't think so. I think employment's going to come in as expected. I mean, it could be wrong 100%. There's a couple scenarios that we will go over a little later, but they're paying a dividend. So now you have Apple paying a dividend. Amazon does not. So Meta's that cash cow from advertising, which I expect to continue to spike going into the election season, right? Into the election year, because you're going to get a lot of ad spend. And now they're just going to monetize that inside of a dividend. So it's almost like, you know, anybody running for office is going to be paying a dividend to some degree. We'll see how that plays out, but that's huge news. You usually don't get super growth stocks like Meta paying out dividends, but that does make a lot of sense.
Previous estimates, and that their headcount's down 22% year over year, tells us what?
It's a turnaround for the ages. I mean, the comeback kid Zuckerberg, I mean, go back a year and a half ago, and now you're doing a dividend. Subscriber growth, digital advertising. I think you're seeing a narrative here. We saw it.
All right, yeah, we'll look at the chart now. Let me we'll see what I'll wait till Apple comes out. Let's go ahead and switch to the chart. Take a look at, that's pretty big. That is pretty big news there. All right. Here we got, dang, first dividend. All right, let's go to Meta. Oh, you know what? We're going to have to do it here because we don't. Yeah, well, we'll just take a look at the big chart first. This one I don't have after hours in. But, ooh, slowing down a little bit. Volume's kind of low. All right, cool. Seems like things are heating up a little bit. Is the volume low on the my volume, or is it the volume for the stream? The CNBC volume. So yeah, Meta is way above all-time highs now at this point. I mean, this might pull an NVIDIA. Wow. So yeah, we should see markets at all-time highs. Let me see what is slowing down my computer. Instagram, no way. Oh, it's probably Twitter. Twitter and Instagram app. I'm in Peru. Oh, what up? Peruvian. Okay. I actually just met a Peruvian family this weekend. Ronnie's Peruvian family. Yeah, let's shut this down because it's a little slow. I don't know what's going on. I'm gonna shut this down and then we'll turn off the Twitter real quick. Keep that coin market cap on. All right, so we don't have Apple results in yet, but you can see Meta is absolutely exploding. 440 at this point. Golly. That's what you want to hear right there. S&P's jumping. It looks like S&P is going to jump to all-time highs by the end of the day. We'll see. Still got that employment report tomorrow. And profit margins are probably going to re-accelerate too, solely based off of the new report we got today, the ISM minus inventories. And that is finally positive for the first time. Puerto Rico. Oh, you're in Puerto Rico. Okay, you're in Peru. Okay, that's what's up. Shout out to you, Puerto Rico. The CNBC is normal. Okay, let me check the... we still don't have Apple out yet. They have a lot of segments that they got to probably go through. I wonder why it's low. That's weird. Let me see. Double check. Here, I'll just turn it up manually. See how that works? A little better, no? Should be better. All right, I'm just going to turn it up manually. All right, cool, Max. I appreciate it, man. Thanks for the feedback. All right, we still don't have Apple Apple earnings out yet. Still waiting. But shoot, looks like we're going to all-time highs. Looks like we're going to make another new high. What's going to stop this market? This is insane. Awaiting Apple results. We're almost there. So you got Amazon left-hand corner here. And it did gap up a little bit. Well, we got to get the details, the earnings call. That looks like it might roll over, but Meta is gone. And Meta doesn't have a lot of costs. Oh, there's Amazon. There's some detail. Okay, here's the Amazon details. We got some details on Amazon. Let me turn this up. So basically for Meta, though, they don't really have many costs, right? That's why they have such a high margin business. I believe they have the highest margins of the mega caps because they don't really have a physical facility. Right? They don't have to produce a product other than the wearable stuff. So that dividend does make sense. Apple has a pretty small dividend, but it's a lot older company than Meta. So let's go ahead and switch over and hear those details on Amazon. Listen to what they got to say.
Lines, Kate.
Hey guys, yep, so we brought you the top and bottom line. That was a beat. Operating margins we have here, that came in at 7.8%. Pretty big increase from 2% about a year ago, but it was flat sequentially. So quarter over quarter, it was flat. We've also got operating income for AWS, $7.2 billion. That was better than expected. Digging into the numbers, most of these segments are significantly better than what the street was looking for. Ad revenue included, $14.65 billion. That was a beat. North American revenue, $105.5 billion, stronger than expected, and that segment was up 13% or so year over year. Also looks like international revenue came in well ahead of expectations at $40 billion. And those are some of the other details here, guys. But again, a strong quarter, and you can see it reflected in the shares here of Amazon after hours. Back to you.
Yeah, up 4% right now. Kate Rooney, thank you. What's interesting to me, Mike Santoli, is that Amazon has laid out a lot of detail, more detail
All right, yeah. So they beat top and bottom line pretty significantly. AWS operating income. I can't say that word. They crushed the street. They crushed the street estimates. So looks like Amazon will be up. Meta is on a tear though. Meta is on a tear, 440. Oh man. So hopefully you get a pullback tomorrow. That stock will be in play. Meta's one of the best stocks to trade. That's going to be in play. Got to definitely watch what I say on here because you get banned for saying anything. Let's see. Does it give me the percentage up today? Why doesn't it give me percentages? No. Okay. Oh, yeah, it does. All right, cool. All right, Amazon. Waiting Apple. We're still waiting for Apple. Anyways, yeah, they crushed it. Meta crushed it. S&P is at 490, all-time high. All-time high for S&P was 2 days ago. What was that, Monday? We hit 491.62, almost 492. No, not almost. About 491 and 3/4 is where we got to. So, dang, it looks like we're going to beat that. And like I said, those profit margins are coming in. Forward-looking profit margins are coming in. We're going to go over that data, though. That's more macro, early cycle information. We're going to go over that a little later. We'll go over it briefly, and then I'm going to do another video tomorrow after the employment report to wrap up the week's data. So again, for Apple, we're looking for here. I'll just keep this on the side. For Apple, we're looking for earnings of $2.10 per share. We're looking for revenue. Wait, let me move this over here. We're looking for revenue of 117 billion. What's going to be the most important? iPhone sales, Mac revenue, iPad revenue. I'm going to say probably services and iPhone are going to be the biggest segments here. I think we got it. All right, we got it. Let me make sure we don't miss anything. All right, so we got Apple out. Let's go to Apple, see if they beat those results.
Out with its second quarter earnings here, $2.16 adjusted for EPS. That is not a comparable number. Revenues coming in better than expected at $1.99 billion, better than the $1.80 billion expected by analysts. The company noting higher prices, a boost in its health and wellness.
Okay, that wasn't Apple. I thought it was the earnings for Apple. We'll see. Let me fast forward it a little bit. We're a little behind. Still waiting? Goodness, Apple takes a minute. Let's see what else do we have here. Apple could be looking at its first year-over-year quarterly revenue increase in a year. So we really haven't seen a quarterly increase in profit. This might also be their best earnings per share EPS estimate in 2 years. This is via Jessica Inskip. This doesn't always mean the stock will react positive, of course, and there's always a reason why behind it. All this thanks to the rising iPhone sales and boost in services revenue per analyst. Yeah, services should be strong, even though Apple's beat last quarter based on services as iPhone sales were not as impressive. So pretty low estimates. I think this is what the market's going to focus on, these iPhone sales. It's important to remember that Apple is always innovating. What drives their revenue can shift. They have a lot of earnings segments, so you just never know. Outperformance. Yeah, so looking for iPhone and services, I think those are the biggest segments. iPhone and services, we'll be looking out for that. Let's go back to the charts until this is ready. Apple's already rising. I mean, I'm sure there's some information that's already out. There's probably institutions that already have the info. But we'll listen to the details here. And then we're also, like I said, we're in that early cycle recovery, as I've said before. ISM new inventory. So we're starting to get inventories all over the economy start to decline, and new orders are picking up. So you can think of inventories as the demand side of the economy. Inventories are like the drain in a sink. They're draining the products, right? Or the whatever the good and services, the demand is draining. The inventories are draining, and that tells us that that buying or new orders are starting to pick up, probably in manufacturing the most. And so you're getting also the orders are picking up. So we're getting momentum pick up in the overall economy. I'm going to go over that a little more briefly later. But that's a boost for profit margins. That means margins are going to be up because companies don't have, if the inventories are draining, you don't have to discount any of your products or services, right? Because people are buying. Or maybe it's B2B, businesses are buying, they're purchasing. And if that's the case, profit margins go higher, and the stock market always leads the economy. And right now we're getting rates fall too. We have 10-year here. Let me switch over here. So we're still not out yet. So are these the details? 40 billion versus 39 billion? No, not yet. Okay. Anyways, we have rates falling at the same time. Big bid in bonds. So yeah, 10-year rates are now, what do they get down to? 3.8. So mortgage rates are probably going to be, well, they will. Mortgage rates will be easing a bit more. That's good for the housing real estate market, which is pretty much the last market to recover. And once real estate does recover, you're going to get a full-on economic recovery. We also got GDP today at 4.2%. Are you kidding me? It was projected earlier this quarter at 2.1, and then GDP went up to 3.3. Now it's at 4.2. These are now cast. So this is just kind of like pulling forward the numbers. GDP is always backwards looking, but these are estimates by the Fed that are trying to guess, okay, based on what we're seeing, here's what GDP should look like for the fourth quarter. I'm sorry, for the first quarter. And Apple's moving almost out, still not out yet. We also have Chainlink leading the crypto market. We have Chainlink leading the crypto market. It's breaking out of a small trend. It hasn't broken the full consolidation yet. There goes Apple. Apple is moving. We're going to be at all-time highs here. We're going to be at all-time highs. Wow. Amazon lifting up. Mega cap tech again. And what have they been saying? Mega cap tech can't keep going up. Well, they pull all the profits. Let's see, Apple's all-time high. See where we're at with Apple here. Apple's all-time high is about what, 190? That's about 200. So we gotta get above 200 to hit all-time highs for Apple. Let's go ahead and chart that out. Or what, 198 to 200 almost. See if that shows up. There we go. So that's quite a bit of ways. I don't know if we get there in after hours. We got quite a bit of ways to go there. Amazon. See where Amazon all-time high is at. Amazon has a ways to go too. I don't think they're going to bid up just yet. $188 for Amazon. You never know. By the morning, we could be up. We could be up by the morning. So, well, tomorrow's looks like we're going to be bullish tomorrow, especially if that employment number comes in pretty solid. And there's two ways to look at employment when we go into tomorrow's morning. Okay, AWS operating income, that was pretty good. Number one is going to be payrolls, right? Payrolls is your momentum indicator for the economy, for the employment, or for the labor market. It's going to be payrolls. Payroll just gives you momentum. It's not the absolute level of employment, but it's the momentum of the economy. And then your unemployment rate is going to give you the level. So if we just stay at the same level, we're pretty much fully employed. You're at full employment. Doesn't mean 100%. You're never going to get 100%, but you're pretty much at full employment. So you can get something where unemployment stays pretty sticky where it's at, and that's going to mean full employment, right? The level stays where it's at, and then you get payrolls start to decelerate a little more, so the momentum's coming down, and that's okay. Momentum should be coming down a little bit, but you're still at full employment. But if you get unemployment tick lower, that means your employment level is moving up, and then if you get payrolls go higher, then you're going to be having the momentum pick up. So there's two factors when you look at the employment report, the momentum and the absolute level. So this is very bullish. I don't even know if we're going to get a pullback at this point, especially with the Fed. Here we go. This got to be Apple.
Two stocks moving in opposite directions. As you can see, Skechers down.
No, this is Skechers. Nobody cares about Skechers. You might like the shoes, but it's not going to move the market. It's not a market moving event. It is not a market moving event. So yeah, that's what we're looking at for payrolls tomorrow. While we're waiting for Apple here, top left-hand corner. Also, so yeah, you got payrolls, momentum, and then the Fed yesterday, right? We talked a little bit about the Fed yesterday. The Fed, it's hard to interpret. What do they say, right? There's all this jargon. Let's get back to the S&P on this chart. I want to see. Oh, S&P is already pushing all-time highs. Ooh, in after hours. Okay. Here goes the next breakout, next level 2 breakout. So yeah, the Fed basically refused. Oh, by the way, we have a potential banking crisis. I don't think it's really going to materialize yet, but the Fed is ignoring it. I heard that they asked the press not to ask about, dang, they're still not ready. New York Community Bank, who fell about 50%. We talked about this yesterday, and supposedly it was an isolated incident. So that's what you want to know. Is this isolated? Is it widespread? But I guess they took some risky bets in commercial real estate, and those did not pan out very well. So if it is isolated, then the market's not too worried. The Fed's not worried. But if it's a spread, or if it's widespread, then you're going to get yields come down. Yields are already coming down regardless. This is the perfect bullish setup for the bull market to continue even higher. Just squeeze the shorts. New buyers are coming in. They're seeing these big profit margins step in from the mega caps: Meta, Microsoft, Apple, Amazon. Tesla's the only mega cap. They're going to take them out of the Mag 7 that isn't beating. That's a little behind, right? And so now you're going to get this bull market start to materialize because the economy is picking up. The economy is recovering, early cycle. Rates are staying where they're at. The Fed is going to try to stay as hawkish as they can, but inflation's coming down enough that they're going to have to cut by March or May, right? And that's the real question there. But they would not speak about the bank term funding program. They asked not to ask. They told the press supposedly not to ask. How are you not going to ask about the program that's actually rescuing regional banks? Somebody's got to ask that question. Well, nobody asked. So I'm guessing the Fed did say something. Why is Chainlink moving? Because I always say this. Why is Chainlink moving? Well, I mean, nobody knows exactly other than there's a lot more demand. Oh, wow. Apple's out. Apple's out. Ooh, is it selling off? Okay, because we got a big candle. Okay, Apple's out. I think somebody mentioned Apple must be out because that was a big move into the market. Okay, let's see. If Apple explodes to all-time highs, that's it. We're in a monster bull market. That's it. That is it. This is the market. This is the market mover here. The market might not even care about employment. It's okay, there we go. They got to be out. I'm just going to let them play.
Eastern, and Apple earnings are out. Steve Kovac has the numbers too. Steve.
Hey there, John. Yep, and it's a beat on the top and bottom lines for Apple. Let me go over those big numbers and then dive into the details here. EPS coming in $2.18. Street was expecting $2.10. Revenues growth again for the first time after 4 quarters of declining sales. $119.58 billion in revenue. Street was looking for $117.9 billion. That's about 2% revenue growth. Again, first growing quarter for Apple after 4 quarters of declines. iPhone, that is also a beat. $69.7 billion in sales there versus the $67.82 expected. I'm sorry, that was a slight miss on iPhone. And also, just to note there, that's the first full quarter of iPhone 15 sales. Services, just a very, very slight miss here, but up 11% year on year. Services coming in at $23.12 billion. Street was looking for $23.35 billion. And this is going to get a lot of attention, guys, so I want to make a big deal out of this. China, Greater China sales down 13% year on year to $20.82 billion. We'll have some more commentary on that in a bit for you guys, but that is going to be a key figure people are going to be focusing on. I'll send it back over to you.
All right. Steve, thanks. Dan Ives, is this good news that Apple was able to beat despite a weak China, or is it bad news that iPhone didn't do better?
Look, I think they have headwinds, but they're able to navigate. And you look at the beat, and also when you look at the China number, you have to really understand what China did for iPhones relative to the other pieces. And look, the headwinds are well known, but if you look overall at these numbers and the margins, I think it's a massive step in the right direction. Now, it all comes down to the conference call and guidance, of course, but relative to, I think, a lot of the negatives coming in, I think this is important.
Paul Hickey, want to get your thoughts on that top line beat, 2% revenue growth. That breaks a 4-quarter streak of flat or declining revenue for the company. How important is that, especially if you look under the hood and you do have some beats and misses? It's a little more of a mixed picture.
Yeah, I think it's more of a mixed picture. I think that's probably the least important of the metrics that were just reported. If there was a company that needed a good quarter and a good reaction to earnings, it was Apple this quarter. The stock's done nothing for 6 months. It's, rallies have stalled out 3 times in the high 190s. And that China number, which everyone was watching for, that was weak. So that's something to be concerned about. But the one but here is sentiment towards the stock has been weak. Coming into the report, the percentage of sell ratings was the highest since the start of 2020. So analysts have been pretty negative on this stock relatively to its history. So not necessarily a great report here, but the conference call and guidance will be something that we'll be looking for and placing more of an impact on. The revenue growth, 2% growth, that's not much. It could be 2% down. That's not a big swing in either direction.
Okay. Shares are under a little bit of pressure, down almost 1.5% right now. Let's get back to Steve Kovac for more on Apple. Steve.
Yeah, Morgan, I chatted with CEO Tim Cook a bit about these results and specifically wanted to drill down on this 13% decline in China. I guarantee you that's going to get a lot of attention on the call. So I asked Mr. Cook about that directly. Here's what he told me, kind of explaining why there was such a big drop over in China. Quote, "The dollar is very strong versus the RMB, and so that negative 13 goes to a mid-single-digit number. So that's how we did the phone last quarter. The good news is that we're 4 out of the top 6 top-selling smartphones in urban China," end quote. So really explaining away a lot of that fall in Greater China to foreign exchange headwinds. But of course, we know it's more than just that, especially with Huawei coming and putting out new phones and those other signals that we have from some of the same data Mr. Cook was citing there that says Huawei is actually taking away some share from Apple and possibly expected to continue to do that throughout the year. Also, he pointed out 2.2 billion active device installs, which they're calling a new record. That's all devices, not just phones. And he also told me, without a specific number here, a record number of iPhone installs in China as well. Obviously, that's a benefit for the services business. And then let's move on from China and the iPhone and talk a little bit about Apple Watch. You guys remember the Apple Watch import ban here in the United States over that patent dispute with the blood oxygen sensor. I asked Mr. Cook about that as well and asked, would you be willing to license the technology from Massimo in order to start selling the full-featured watch? And he told me, no, we're focused on the appeal, and there's a lot of reasons to buy the watch even without a blood oxygen sensor. So basically saying, look, they're still fine going through this legal process. Plenty of other activities you can do on the watch, fitness tracking, the car crash detection, for example, is another one he brought up, the fall detection, another one, and just kind of saying, look, people still will want to buy the Apple Watch even in the United States, even without the O2 sensor, and said, they're going to go through the appeals process, but no talk right now of licensing that technology from Massimo, which won that patent dispute so far, guys.
Yes, indeed, Steve. Thanks for that additional color. Mike Santoli, want to go back to you with this because looking at what Apple's done year over year, yes, the iPhone was stronger year over year, but the Mac was about flat. The iPad.
Okay, well, hey, it is what it is. You have basically 4 of the mega caps crushing earnings. Meta, I think, is going to have the most press because of that dividend. Amazon crushed it. Google beat. Microsoft beat. It's Tesla and Apple who are missing at this point. Apple's at the end of their growth cycle, though. And when I say growth cycle, it's not necessarily a growth stock anymore the way it was in the past. It's probably good turning into a value stock. That's probably going to be the talk going forward. Apple turning into a value stock. Let's take and what they did is they basically missed on the most important segments. They missed on iPhones and services, right? But a lot of that does come from China, so they are a little more vulnerable to China, where Tesla, it's a little different, where Chinese sales were strong for Tesla, Model Y very strong, and so it's, you know, they're in two different phases of their growth. But Apple's pretty much peaking out. Meta's going to be the talk, though. Meta with the dividend crushing expectations, Amazon crushing expectations. Also, Amazon should be announcing their new AI helper. I don't know what it's called, but they have a new AI to help you shop in on the retail business. So I think they could make another run. Who knows? They could boost even higher during the earnings call. The earnings call is always important, but yeah, Apple missed year over year. Or I'm sorry, Apple missed on the most important segments. Either way, you got a big beat by Amazon and Meta. Meta's just, I mean, how much is Meta up right now from the close? 14%. That's big for how, I mean, they're going to be in the trillions. You're going to have about what, $4 or $5 trillion companies at this point. I mean, that's pretty much earnings. Let's check out the overall market. And actually, let's turn this back into a different frame. Let's go here. All right, there we go. I mean, that's a big move right there for Meta. Is this a 4-hour chart? No, it's not the 4-hour chart. What am I doing? Let's bring this down a little further so we can see it clear. Okay. All right. Is that as far as I can go on this? I guess it is. Let me push it out a little further. So we're at what, 450, 453 and running for Meta. Just go to the daily chart. 453, definitely at all-time highs. Your last all-time high was 394. So it was pretty much at all-time highs before it broke out. And now when you go year over year, I mean, and this is why these, you know, a lot of fund managers are going to keep chasing this, because now we're breaking out of all-time highs, and you're up 334% in what, a year and a half since the October lows. How long has it been? 18 months, and you're up 300%, 350%. Nobody's doing that. Actually, it's up more than that. I didn't even measure the, let me see, we're at about 450. Yeah, about 400% in 18 months, right? So, I mean, everybody's going to be looking for that monster pullback. This is going to be a huge gap up. It should start up here. We'll see how it ends, though. You never know. The earnings call could tank it. I really doubt it. That dividend is huge, though. Now they're going to be paying a dividend, so you're getting that fixed income. It's not going to be much, but if you do own a lot of stock, it is going to be a lot. While other companies are cutting their dividends. Who cut their dividends? Somebody cut their dividends yesterday. And then Chavez Game, I'll answer your question in a second. Somebody cut their dividend. I can't remember who it was. They tanked significantly after they cut their dividend. But you got Meta moving. Now you got Amazon. And there's not much else to say. I mean, they crushed earnings. Let's see where Amazon's at relative to the all-time high. They still have a ways to go. They do have a ways to go. But moving over, and we'll see where S&P's at by the end of the day. See, S&P, we're looking at 491. It's just been strong. It's just going to keep grinding. If we go to the RSI, right, the RSI had a nice pullback the other day. And in an uptrend like this, let's turn the volume off. It's a little bit in the way. When you have an uptrend like this, the RSI can remain oversold, and it doesn't have to go back down, because we're in a very powerful uptrend. The Fed's at the end of their cycle. The economy is strong. Employment is strong. Inflation is not coming back. You know, oil prices, they spiked and they came back down. There's no big geopolitical risk. You're heading into an election cycle where you're probably going to get even more stimulus. They're now talking about a tax cut, right? That is the talk on the street now. that they're going to try to not pass tax cuts. They did a child tax cut yesterday, but they're going to try to talk about the Biden administration getting in tax cuts for 2025. And the last time we had tax cuts, the market went up 30%. The S&P was up 30% from 2017. Are they going to be as powerful as tax cuts? I don't know. I don't know if they're going to do corporate tax cuts. They're behind that. But you can be, what does a user say? You can be oversold and still trend higher. 100%. It's different than on the downside, especially when you're in an uptrend. You can stay oversold and then just come back up. If we go to that monthly chart, let's see what it looks like. On the weekly, on the weekly, the oversold is just kind of getting there. So you might have it just flirt around oversold for a while, right? You can see it just bloop, bloop, bloop. I think we've done that before. I mean, back here, of course, this was big monetary stimulus and fiscal, but you got oversold on the weekly and it just kind of stayed there for a while, right? You can stay there for 6 months. And if that's the case, then you're going to have a vicious rally. I didn't think it would come this soon. I thought we'd have a bigger pullback and it just didn't happen. Hey, great. Great for the market. I mean, you could always still have a pullback, especially if employment comes in really bad tomorrow, but we're going to see how the dollar moves off of this tomorrow. The dollar is kind of the key. We kind of know where rates are headed. Rates are trying to go lower because basically some of the data is softening in the momentum for payrolls is softening. I think government payrolls were down a bit, and we'll head to Chainlink. Would you say there Ben Bitboy Armstrong announced he's retiring from crypto streaming, says he has lost everything. Oh man, no way. No way. I guess we'll go ahead and jump into crypto here. So Bitboy has lost everything. Wow. That's unfortunate. I heard he's getting sued a lot. He's being sued up the ante. So you asked anyways, Chavez, why is Chainlink moving up? Yeah, I was going to show that. Let's throw that up here. Chainlink market cap. Move this over. Let's see if I can get it to where we can actually see. It's kind of hard to see on here. See, I think we can see it. You can see it a little bit. So from the top cryptos, you got Bitcoin. This is the last 7 days, all the way to the right that we're looking at. Bitcoin's up 7%. And I think Bitcoin right now and crypto starting to turn because we had a washout, right? We had that big upside move. Now you're getting the washout, and you're getting a washout from a lot of leverage that came in during the ETF craze. And the washout already pretty much happened. And you had Grayscale. A lot of people moved their Grayscale Bitcoin over to, I believe they moved it to BlackRock's ETF, right? Solana's up 11%. Bitcoin's up 7%, a little more than Ethereum. But right now in the top 20, okay, Avalanche is up 10%. Right now, the top 20, you have Chainlink up. Actually, the top 30, Chainlink is leading the market again. Last time it did this, it did lead the upside move from 7. It moved up to about 14, 15, and then jumped to 17 before it retraced lower. And the question is, why is Chainlink moving up so much? Well, in the short term, nobody really knows. There's more demand than supply, that's for sure. But I will tell you that a lot of they have the most partnerships. I've said this before, out of all cryptos, they have by far the most partnerships. And it also, I think, has the best trend, right? I think we're looking at the best trend here for, I don't want to say trend, but the setup for Chainlink is pretty monstrous, okay? And this is the longest consolidation in the whole crypto market that we had, just sideways action. And if you do remember the last time, Chainlink did move from the lows, it went up, I think it did like a 40, 50x from the end of 2019 all the way to 2021. It did peak out kind of early because it moved so fast, but it had this large consolidation. It broke out, and then it consolidated again here for a while, right? You can see that consolidation. If it closes, I think if it closes above 1650, we're looking at another run here, and we're almost there. We're at 1720. I think it's breaking out as we're speaking. Oh man, we're in the middle of a breakout. Now you're getting risk come back in, right? The risks is risk on because, big tech earnings were strong. Not only that, but I think crypto, a lot of it runs off the ISM, the momentum indicator. And that came in ISM. ISM inventory, new orders minus inventories was up. So for the first time in about 18 months, we've had demand go positive, or demand is now new orders. So orders not being filled yet are coming in above 50 or in expansion territory. What does that have to do with crypto? Well, if you're an institution, the institutions always look at new orders minus inventory, a lot of them, to get a forward look on where the economy is headed. So that's telling us the economy is about to start expanding pretty tremendously from the lows, right? The economy is still, the market might be at all-time highs, but the economy is still recovering. So for Chainlink, they have, I read a couple of the white papers, and you have JP Morgan's Onyx, which is a private blockchain. It's not public. And in the paper, it said, hey, there's going to, tokenization is the big opportunity here, because we're going to be able to create new products that don't exist that people can invest in. It's more secure, it's faster, it really makes them more money over time. And with those blockchains, they need to tokenize everything. They need a system that's able to pretty much connect all the blockchains. Now, they said it's going to be hard to get everybody to agree on one system, but if you go to Citigroup or Bank of America, they say, hey, we think we're headed for a one system. And it doesn't mean everybody's going to buy into Chainlink. It's a back infrastructure. And I would say this, whoever asked that question, Chavez, do you use TCP/IP? Do you use TCP/IP? Does anybody on here use TCP/IP? You're probably like, what? What is that? I don't know. Well, if you use the internet at all, you're using TCP/IP. It's the infrastructure of the web in the background, and that's exactly what the biggest driver of Chainlink is right now, which is CCIP, and it is a new web. It's Web3. You keep hearing about it. We're coming closer to Web3, where on that web you can actually own stuff, but what it is where it's going to start off and really make momentum is between banks. Swift is using CCIP right now. They're doing experiments to see if they can move assets on chain, and this is going to be private to public blockchains. They're seeing if they can do that, and so far it's been successful. So it's only a matter of time. 2024 is supposed to be the year that CCIP goes online. It's not going to be globally adopted, but the expectation of it is what drives the price. So it's actually CCIP being driven. Now, what happens is, in order to use those rails, kind of like Visa, you have to pay in tokens. You got to pay the Link token. You don't have to buy Link, right? So Swift, all these banks, they don't have to actually purchase Link. So what happens is they just use dollars, but the dollars go into the Link network and they purchase Link themselves. So essentially the Link token is going to be used to create revenues for the Chainlink ecosystem, which entails a lot of other things, right? Now, if we go to crypto and we look at Chainlink versus, and we looked at this earlier in the year, earnings alert, who's this, Microchip? Oh, okay. If we look at Chainlink versus Bitcoin or Ethereum, okay, Chainlink versus Ethereum, well, it moved against Ethereum pretty strong in the last market. I mean, you can see it was very explosive, came back down. Obviously, it's more of an altcoin, and now it's starting to break and confirm that the strength of this alt, I don't even like to call it an altcoin. It's not a meme coin, but the strength is rising. It had this falling wedge pattern. I don't know if you want to call it a wedge, or you don't have to call it a wedge. You could call it just a flag, whatever. It's crypto. It's going to be wild. Now it's breaking that pattern. So it is gaining momentum against Ethereum, okay? And once it breaks this new high, it's gonna be pretty strong. That's typically what happens. Now, Chainlink against Bitcoin, this is the real monster. You want to get Chainlink moving against Bitcoin. And another alert, who's this? Disney proxy statement. Oh, who cares? Anyways, you're getting Chainlink move against Bitcoin. I think this one's a little more important because it's a totally different ecosystem. It's not necessarily tied to Ethereum. And right now you're starting to get Link break out against Bitcoin. And the bad news, first, I don't want to say I warned you or I told you so, but we did talk about XRP not being able to make it back to all-time highs. I don't know if it ever does. Link versus XRP is moving pretty strong against XRP at the moment. XRP had a hack. I think it got hacked. Somebody probably knows, and it's not moving. It's not moving. It's kind of just been falling, and I think the use case for XRP is pretty much done, unfortunately. So it is what it is, but it did get hacked, and that's part of CCIP or Chainlink's infrastructure. is that it's never been hacked. Chainlink doesn't get hacked. It's a bridge. Those bridges have never been hacked. And if you're going to on-ramp onto a blockchain, you're going to need high security stakes. And this has the highest security, highest proven security out of all the other blockchains when it comes to price feeds or just transacting. Also proof of reserves. So XRP didn't get hacked. One of the founders' wallets did. Oh, okay. I thought XRP got hacked. Okay, so one of the founders' wallets got hacked. Interesting. Well, that's not too bad, but either way, it doesn't look like there's a whole lot of speculation into XRP at the moment. Let's see, where's Aave at? Aave's down, but yeah, you can definitely see that that Chainlink is moving strongly against Ethereum. It's starting to move against Bitcoin, and Solana. I think Solana is going to be that other big winner. Solana has a really good pattern. No advocation, obviously, not any advice, but these are the top cryptos. Then you have the stable coins. Also, the stable coins are hooked up to Chainlink. So USDC is probably going to IPO in the stock market, from what I hear. USDC Circle is the company, and they've already hooked up to Chainlink to start this stable coin. To get their stable coins online, because that's how these banks are going to interconnect, or they're going to use stable coins. They're going to create their own stable coins or use their own stable coins, digital dollars, whatever it be, and transact. But they need a system to transact on, and that system should be, it's speculated to be on the CCIP network, right? So you're on a new internet, a Web3, because everything's already online, but now this is a verifiable web where things can be verified. And you can have ownership. It's the whole Web3 thesis, but it doesn't really come together without a big connector, without a bridge. And Chainlink is that bridge. Cardano's still up against it. Avalanche, Tron. Tron holds a lot of USDC. I think it holds the most USDC. I'm pretty sure. Maybe I'm off on that. Haven't kept up too much with it. But at the moment, yeah, Chainlink is breaking. This is the break. So all-time high is 1765, pretty much this zone. Or not all-time high, I'm sorry, the previous high, the local high. This is the local high, and it is now pushing. And it had a really similar pattern. I pointed this out on Twitter earlier, which is it makes a high, and then it makes a new low. Everybody gets shooken out, comes back up, makes a higher low, and then it consolidates. It didn't really consolidate. Then it just breaks out. We saw that when it first broke out here, right? It made a new high up here, and then made a low, got down to $5. I mean, if you got it, scoop some up down there, nice. And then it came back up, made a higher low, consolidated for a little bit, and then it just sprung forward. And now we're in the phase of the economic cycle where this really pushes risk assets higher because rates are coming down. 10-year rates are starting to ease a little bit. So the Fed doesn't necessarily need to hike. I'm going to move over a little bit to the macro. All right. The Fed doesn't really need to hike because there's a lot of people piling into bonds. Now you're getting inside of the bond market. You're starting to get that pattern, that reverse head and shoulders pattern. Okay. So bonds found a floor, and now they're starting to lift again. The reason that is significant because as bonds go up, automatically yields come down. So maybe the Fed doesn't cut in March. Maybe the Fed doesn't cut in May. They didn't cut yesterday, but yields are cutting for the Fed, right? Take a look at ARB, please. What is ARB? Is that your ticker? Is ARB a crypto? I'll take a look at it. What up, Hassan? So rates are easing for the Fed, right? This macro stuff tells you a lot of what's going to happen. I think I had a, let me see if I have that, I think I put it on Twitter. I'll try to pull it up. It's basically the ISM new inventories, or one of the business cycle indicators versus Bitcoin. And the last two cycles, it didn't predict, but it very much correlated with Bitcoin. And we're starting to get that again. So you're getting rates down. Come on, pull up here. Let's go. X takes a lot of data. Yep. So rates are coming down. If the dollar's done going up at this point, and tomorrow's going to be the move. We already got the Fed. It didn't move up on the Fed. Everybody thought, oh, the dollar was going to go up yesterday. Didn't happen. So tomorrow, what gets the dollar lower is going to be employment momentum coming down and the employment level just staying where it's at. The only thing that gets the dollar spiked tomorrow is going to be if unemployment has spiked to like 4%. We're not seeing any signs of that. There's no signs of unemployment spiking. It might go up by a point or two, but no, there's no signs of it actually spiking. In that case, the dollar is going to continue to ease, and we're going to see this because we're seeing that rotation into stocks, into crypto, right? And the dollar should come down because as you invest your dollars into assets, the dollar goes lower, right? Because you're investing those dollars into other assets. The real estate market is starting to come back. Rates should be easing. So it's risk off for the dollar. It's risk on for risk assets in general. 2-year rates are almost making a new low. And also a lot of this is, and we got to watch this. This is kind of the risk too. KRE had a big dump today. If you guys remember the banking crisis was right here. This was when the Fed balance sheet turned back on, or the Fed printed $500 billion to save the regional banks. Is the same thing going to happen? Probably not the same, but as long as KRE, the regional banking ETF, falls, then you're going to get the Fed getting closer to cutting rates or printing money again. And I think crypto is starting to sniff that out, which is why you're seeing Bitcoin get a bid. It does look a lot more forward. It's it's pricing a lot more forward than stocks do typically, right? It doesn't have earnings, so it's all liquidity, interest rates, and GDP moving up. A strong consumer confidence is spiking also at the same time. Now the bank that actually fell, New York Community Bank, and it made a new low. It closed even lower. So this might be what crypto is sniffing out right here. Okay, this is New York City Bank, and now it is down 44%. I mean, basically 50%, right? That thing is down near 50%, and it's below the banking crisis levels. And is it an isolated event? Probably, but if it's not, then you're definitely going to get some more. You're going to get the rate cuts pull in closer. I don't want to go over all the data, but that's what we're getting. So I'll quickly go over some of this. But I wanted to show that chart. It's not pulling up for me. Okay, I got it somewhere else. I think I posted it inside of the Discord. Let me go find it. Here it is. And I guess nothing is loading. All right, you should be able to see it right here. TikTok, you can't see it, but see, where's it located so I can pull it up. That's weird. Anyways, you guys can see it right here on YouTube. So this is the ISM inventories. Actually, this is just new orders. I don't think I was able to get the inventories, new orders minus inventories, but this is new orders. Actually, I can pull this right here. Yeah, there we go. Okay, there we go. Oh, come on, stay up. All right. So this is new orders when they went positive in the last cycle. And this was basically when we got tax cuts. This is around when we got tax cuts. They went from red to green, which means they're returning positive, right? They're starting to expand now. New orders are starting to climb in the economy, manufacturing specifically, because that is the business cycle more so than services. And this is when Bitcoin had a big run, right? The first time. Actually, that was before. That was early. That was like 2013 after the financial crisis. And then here, same thing. Inventories went red partially, but the down cycle pretty much ended. And as soon as those new orders picked up, Bitcoin started its cycle. It kind of already started, but it started to really gain momentum. And then the last one is kind of hard to tell. You can't really call it on here because this was the pandemic. I mean, everything collapsed, everything came back. So that wasn't really an inventory signal because the Fed cut rates, they increased the balance sheet and fiscal policy came in. But now we're starting to get it to go forward. This is demand momentum. Momentum for demand is now positive. It's at 52. Once you get above 50, you're starting to hit that. It's been 18 months. We've been in this recessionary period for a while. And so this might be the kicker. It's not the only single factor, but it is one factor telling you that the momentum is here. And these are JP Morgan macro analysts who say, hey, look, if I had to look at one thing, it would be ISM new orders if I had to. And I think more specifically, they said ISM new orders minus inventories because that gives you even more momentum for expansion. And we'll finish off here with Tesla. Okay, we'll finish off here with Tesla. It looks like Tesla's still struggling, but hey, with the overall market breaking to all-time highs, again, you don't really get the RSI this low very often. Okay, and it always bounces. It's starting to bounce. It's struggling. It's not getting too much, but you got a nice capitulation candle there at the bottom. This was extremely oversold. We are picking up. There's always the chance that it takes us to go to the weekly chart. And I got a little bearish today on Tesla because we got under that anchored VWAP. Right, anchored VWAP is right here. This is basically volume weighted average from when all the volume came in when it sold off from the lows, and it slipped beneath that, but it came right back up. Right, so that's strong buying power starting to show, and there's going to be a battle in between the zone, but you do have Tesla extremely oversold. At least fills this gap at some point. Right, Meta conference call underway. So Meta's about to start their conference call. And then, the next stream, what we're going to go over is this early cycle recovery. Now, here's what we got. GDP is picking up. ISM new orders are moving into expansion territory, first time in 18 months. Now, inventories are ripping higher. The new ISM new orders minus inventory, basically demand for orders are picking up tremendously. And then rates are easing. Rates are easing for the Fed. And then you have oil's not really making a big move, so that's a good sign. The New York City bank is falling. That causes rates. That's going to make rates go lower. And employment tomorrow is going to be the big guess. What do we get? Payrolls is momentum. The unemployment level is also going to be important. And man, rates are not moving. The dollar's not moving. So if you do get, and this is going to be looking what, January? Yeah, we're looking at January data. So I'm guessing it's going to be weaker than the last report. I'm thinking the momentum comes down a bit, meaning we see payrolls, and who knows, maybe the consensus is really low, but payroll momentum should be coming down. That's going to ease rates. Unemployment, I don't think that really matters for rates unless it makes a gigantic move up or down. I don't really see it budging much. Might tick up a point. If it does tick up a point, rates come down. And then you also have the Fed stressed a lot about the employment report. And so if you do see those weaker employment numbers tomorrow, I think that's going to be bullish for the market because they're going to pull rates forward. That's been the real conundrum here is when is the Fed going to cut? And yesterday Powell made it pretty clear we're not thinking about a cut in March yet. That's not on the table. He seemed pretty frustrated. That was probably the most I've seen him frustrated for a while. But if you get those employment numbers weaker, then now those Fed cuts are going to be pulled forward from, let's say they were in June or summertime, they're going to get pulled forward a bit. Depending on how weak the employment report is, the dollar should also roll over if it's weaker, unless you see payrolls go negative, because now that's going to be a slowdown alert, right? That's going to be a slowdown risk, a complete economic slowdown risk there. Or if you see unemployment spike tremendously, then the dollar goes up. But if it doesn't, you should have dollar and rates roll over tomorrow. That might just, end it. So then the Fed doesn't necessarily need to really cut anytime soon because the rates are doing it for the Fed. That's what they want. They want the market or the bond market to do the work, because that kind of keeps markets the way they should be. And then also softer employment or inflation. Oh yeah, inflation. We don't have inflation numbers though for a couple weeks, so it's mostly employment that we're focused on here. And I think that's pretty much it. The balance sheet drained. They had no comment on the balance sheet. They had no comment on the bank term funding program or the RRP. So they don't even want to talk about that. And I think that tells me that they want the market to correct itself. They don't want to give any hints on what they might do. They are speaking about it in the meeting for the first time in a while, so they are talking about it. And we'll get that information in March. But until now, our biggest factors are going to be basically that employment report tomorrow. Is it going to be weaker? Is it going to be a little stronger? If it's weaker, well, we might get rates make another low. At this point, bonds are bidding up. So where's rates at? There we go. We're looking at the 10-year. 10-year dipped a little bit today. And if it makes a new low, that's going to support equity prices because valuations are up. Now, the only way this would be a bad deal is if, the market thought the economy was rolling over, but it's not. We're seeing the ISM pick up, start to recover. We're seeing inventory start to drain. So the economy is actually recovering slowly, but it's still recovering. And you're getting rates fall at the same time. So that's going to be very stimulative going forward. And we'll see how that plays out. I'm going to finish here off on YouTube. Johnny, let me know if you want to jump in there, Johnny, and talk a little bit about macro. And I'm going to end you guys here on YouTube. You can, if we stay here on TikTok, we'll stay on TikTok if Johnny wants to talk. Other than that, we'll have that employment report, the macro report for you guys tomorrow. Thanks for joining on YouTube. And stay blessed. We'll catch you tomorrow. Thank you, guys.